Hi, today we're going to talk about the previous high as support areas and also a tradable area where you can find buy setups. Now, first of all, why do we want to learn about support? We want to learn about support because we want to know when a stock stops dropping. And of course, secondly, we want to, for financial reasons, we want to use it as a trade setup. So, what is a previous high as support? Now imagine the stock moving from here, going up, and then it corrects, and then this time it moves above this previous high here, and then it drops here. And then at this previous high area, it finds support, and then it moves higher again. Now I want you to imagine the previous high here is actually a resistance area, because it is not easy to overcome a previous high, but in the event that the stock is able to overcome this previous high area, this technical analysis principle tells us that an old high once overcome becomes a new area of support, which is why when the stock drops to the area of this previous high, there's a very high probability that it's gonna move back up. And it is at these areas that astute traders can find excellent trading opportunities. Now I have with me here the stock chart, daily stock chart of Constellation Energy. You can see that this stock tries to move up, and around this area it declined. It moved up, formed a topping tail, then tries to move up, but eventually it formed kind of rounded top, and then it declined. But is able to find support at this area, and this time this push up was strong enough to overcome this resistance area. But the bullish momentum doesn't last long, and then it had a slight correction. Now the beauty of this is that once this previous high has been overcome, it now becomes a new support. And guess what? The stock tries to go down. There are three red bars here, and then a doji forms. This tells us that bearish momentum is slowing down. There's indecision in the part of the bears. It tries to rise and then declines, but it doesn't fall below this support area. And eventually a nice small green candle forms and a bottoming tail forms. And this tells us that the bulls are beginning to win. They're taking control of the situation, and this is where the traders, astute traders, can find a trade opportunity. They can buy the stock here, put the stop loss, the swing low here, and ride it higher for a swing trade. Why? Because we have very bullish and nice candlestick patterns at a previous high which acted as a support, which is why the stock continued to rise even when the stock had a nasty decline here. Because this previous high acted as support, the stock was able to bounce back up higher. Now let me show you another example. You have this stock, Broadcom. See how it went high and then quickly it formed a topping tail. It tried to rise but it can't, go down again, and then this time it tries to push up, but eventually it formed kind of around the top, unable to go above this resistance area, and the story happens again. It goes down. The story repeats itself again, which means there are so many times, 1, 2, 3, 4 times that it tries to go above this area. Okay, but it failed to do so. But eventually the stock this time declined but push up, is able to go above this resistance area, and this is like a win for the bulls. The bulls have won the battle, and the tide is turning in their favor. And this previous high now, because it's overcome, now becomes a new support. Okay, multiple tops can actually be a stubborn resistance, but once the bulls break it, it will become a new defensive areas to keep the stock from dropping. So if you see a stock like this correcting to the area of a multiple high, which now acts as support. What does it tell you? Well, this is going to be a very strong area of support, and that's why it's going to be a very good buying opportunity. And look what happened. The stock drops, forms a bottoming tail, some small dojis here that show indecision in the part of the bears. The bears try to take control, having a bearish bar here, but the next day immediately a green bar forms, and this tells us that bearish momentum is slowing down. The bulls are taking over, and trader can buy the stock around here, and look, the next day just a very large green candle, because a strong area of support will eventually cause the stock to shoot up higher, and this is a very nice swing trading opportunity for observant traders. Let's look at more example. Costco stock is a daily chart. This stock tried to rise here, then drop, try to rise. Well, it's kind of stubborn, unable to go up, and then it declined again. It tried to rise, some decline, but eventually it pushed higher and was able to break this resistance area. Immediately, this previous high became a new support area, and even though there was a gap down, the next day there was a small candle showing slowing down of bearish momentum, and a green candle formed, and this offered a buying opportunity for traders because the stock dropped to an area of support. You can buy it and then ride it higher, and this setup produced a very nice gain. But of course, with stocks, they don't go up in a straight line. Eventually they will correct sideways, and then it correct down to this area. But immediately a green candle formed, the next day gap up a doji, and green candles, and the stock was able to push above this previous high area. So if you remember the technical analysis, once a previous high is overcome, it becomes a new area of support. And what happened? When the stock corrected, there was a very ominous looking red candle, but immediately the next day there's a green candle, and traders can actually buy the stock here, put a stop loss here. Why? Because this is an area of support and can ride it higher for a swing trade. CrowdStrike Holdings, this stock had a stubborn resistance area around here, but eventually it broke out. When it broke out, this area became a new support area, and even though it tried to decline, eventually it did not, because there's a nice support area and this could be a buying opportunity. And the stock rose, broke above this previous high, and guess what? This previous high becomes a new area of support, and when the stock declines to here, form dojis and bottoming tail, this tells us that bearish momentum slowing down. Traders can buy here and ride it higher. So these are excellent opportunities, buying areas for traders to buy the stock. Now, let me show you another stock. This stock had a decline, and then basing, and then a very large green candle push it upwards, and eventually, because of this resistance area, it formed a topping tail but declined. It took quite a number of days, about 2 weeks, for it to overcome this previous high here. But once it overcome this previous high, this was an area of new support. Stock decline, formed a bearish bar, but the next day the bulls took control, and this was a buying opportunity for a swing trade higher. And of course, this was a previous high as well. Okay, you know, the swing high once overcome becomes a new support, and wow, a nasty red bar here. But the next day, bulls took in control, doji forms, kind of bottoming tail candle forms, and eventually this provide a buying opportunity for swing traders. You can buy the stock here and ride it higher. So these are very good examples, and maybe you can watch back the video again for the lesson. I hope this lesson has been helpful, and if you find it helpful, you learned something new, please like this video and subscribe to my channel for more videos like this, and I'll see you in the next one.